Alright folks, let me paint you a picture. And it ain't a pretty one. Imagine this. You're driving along, minding your own business, and bam! Your car decides it's done with life. Or maybe you walk into work one Monday morning, and your key card doesn't work. You've lost your job just like that. Or worse, a sudden medical emergency hits your family, and the bill staring back at you has a big fat $15,000 on it. What in the world are you going to do, panic? That's what most people do because they're not prepared. They haven't built their financial fortress. This, right here, is why I scream from the rooftops about cash reserves. They are absolutely essential. Think of them as your financial shock absorbers, your Kevlar vest against life's unexpected punches. When you have a healthy emergency fund, you don't have to resort to stupid decisions. You won't be whipping out the plastic and going into credit card debt, paying those vultures 25% interest. You won't be forced to liquidate your investments when the market is down, taking a huge loss. You won't be sweating bullets about how to pay your rent or mortgage. And most importantly, you won't feel that crushing anxiety and powerlessness that comes when you're financially naked and afraid. Listen to me. Without cash reserves, you are literally one crisis away from complete and utter chaos. One flat tire, one pink slip, one doctor's visit can send your whole world spiraling. But with them, you're in control. You call the shots. It's not a matter of if an emergency is going to happen, it's when. Life happens to all of us. The key takeaway here, and I want you to burn this into your brain, is that emergency reserves turn financial emergencies into manageable inconveniences. That's the power we're talking about. So, the big question everyone asks is, alright Dave, you've convinced me, I need cash reserves, but how much is enough? And that's a smart question because the answer isn't a one-size-fits-all deal. It's not like buying a t-shirt where large fits most. No, your emergency fund needs to be tailored specifically to you, your life, and your situation. There are two primary factors that determine how much you should keep stashed away for those rainy days. And we're going to break them down so you can figure out your number. It's not rocket science, but it does require some honest assessment. The first critical factor is your monthly expenses. I'm not talking about your hopes and dreams budget. I'm talking about what it actually costs you to live, to keep the lights on, food on the table, and a roof over your head. This is the bare bones survival mode number. You need to sit down, get real with your bank statements and your bills, and calculate exactly what you spend each month on necessities. This includes your mortgage or rent, utilities, groceries, transportation, insurance premiums, and any minimum debt payments you absolutely have to make. Forget the lattes and the Netflix for this calculation, we're talking survival. Once you have that baseline monthly expense figure, we need to look at the second factor, your personal risk profile. This is where it gets even more individualized. Are you a single person with a super stable government job that you've had for 20 years? Your risk profile might be lower. Or are you the sole breadwinner for a family of 5, working in a volatile industry on commission? Your risk profile is significantly higher and your emergency fund needs to reflect that. We're talking about job security, the stability of your income, and whether you have multiple income streams or just one. Think about it. If you're self-employed, your income can fluctuate wildly. One month you're riding high, the next you're eating ramen. That variability means you need a bigger cushion. Do you have dependents, kids, elderly parents you care for? Each dependent adds to your financial responsibility and thus increases the amount you should have saved. Alright, so you've done the hard work, you've figured out how much cash you need to have set aside for emergencies. You've got your number, maybe it's $10,000, maybe it's $25,000, whatever it is, it's your number. Now, the next logical question is where in the Sam Hill do you put this money? You don't want it sitting under your mattress because that's just asking for trouble and it's not earning you a dime. And you definitely don't want it tied up in some risky investment where you can't get to it quickly when you need it. When we're talking about an emergency fund, there are 3 main criteria you need to consider for where you park this cash. Safety, liquidity, and if possible, some kind of return. Safety is paramount. This money absolutely, positively, has to be there when you need it. Liquidity means you can get your hands on it quickly, without jumping through a bunch of hoops or paying ridiculous penalties. And while the primary job of an emergency fund isn't to make you rich, if it can earn a little bit of interest to at least try and keep pace with inflation, that's a bonus. So let's talk about some practical options. First up, and probably the most common, is a high-yield savings account, HYSA. These are typically offered by online banks. and they generally pay a much better interest rate than the brick-and-mortar bank down the street where you might have your checking account. The money is safe, usually FDIC insured up to $250,000, and it's liquid. You can usually transfer it to your checking account within a day or two. This is a solid choice for the bulk of your emergency fund. Next, you've got money market accounts, MMAs. These are similar to savings accounts, but they sometimes offer slightly higher interest rates and might come with check writing privileges or a debit card, which can add a little extra convenience for accessing funds. Again, look for one that's FDIC or NCUA insured. The key here is to shop around, compare rates, and look at any fees or minimum balance requirements. Don't just assume your current bank has the best deal because they probably don't. Then there are short-term certificates of deposit or CDs. Now, I'm going to talk more about CDs later, because they have some downsides, especially for retirees. Inflation is a sneaky thief that eats away at your savings. Prices rise and your money buys less. Higher interest rates can help, but if they don't match inflation, your savings lose value. Consider high-yield savings accounts and treasury bills to protect your savings. Let's talk about certificates of deposit, or CDs. They seem safe, but there's more to the story. Rising interest rates can make your locked-in rate look poor. Early withdrawal penalties can eat into your earnings. For retirees, this can be especially dangerous. CDs can limit your flexibility in a volatile market. Let's talk about banks and FDIC insurance. FDIC insurance protects your deposits up to $250,000 if a bank fails. But banks don't just store your money, they lend it out. This is called fractional reserve banking. If a bank collapses, the FDIC steps in. We've talked a lot about the nuts and bolts of cash reserves, how much, where to keep it, how inflation affects it, the deal with CDs and FDIC insurance. But I want to zoom out for a minute and talk about the bigger picture, the why behind all of this. Because building cash reserves, folks, is not just about hoarding money under a mattress or being a financial Scrooge. It's about something much, much bigger. It's about buying yourself peace of mind, flexibility, and genuine power over your own life. When you have a fully funded emergency fund, a healthy cash reserve, you fundamentally change your relationship with money and with life's uncertainties. That constant low-grade anxiety that so many people live with, the fear of the unexpected bill, the dread of a job loss, it starts to fade. It doesn't mean bad things won't happen, because they will. Life is life. But it means you're ready for them. You've built a financial fortress, a buffer between you and the storm. That peace of mind is priceless. You sleep better at night. One of the most immediate and powerful benefits of having cash reserves is that you are far, far less likely to go into debt when an emergency strikes. Think about it. If the car breaks down and you have the cash to fix it, you just fix it. You don't have to put it on a credit card at 22% interest, turning a $1,000 repair into a $1,500 problem over time. You don't have to take out a stupid payday loan or a personal loan with ridiculous fees. You handle the problem with your own money and then you move on, debt-free. That's financial freedom in action. Beyond just handling emergencies, having cash gives you incredible flexibility and allows you to make better life and career decisions. If you're in a toxic job that's crushing your soul, but you're living paycheck to paycheck with no savings, you're trapped. Alright folks, we've laid it all out. Building cash reserves isn't just some nice idea from a finance guy, it's the bedrock of your financial well-being. It's what separates a minor inconvenience from a full-blown, life-altering catastrophe. If you don't have that cushion, that financial shock absorber, you're playing Russian roulette with your family's future, and that's just plain dumb. You've got to have money in the bank that you can get your hands on when life happens, because I promise you, life happened. So what are you going to do about it? Are you going to click off this video and go back to worrying, hoping things will magically work out? Or are you going to take control? I'm telling you, the peace of mind that comes from knowing you're prepared is worth more than any fancy car or vacation. Start today, not tomorrow, not next week, today. Calculate your 3 to 6 months of essential expenses. Open up that high-yield savings account. Set up an automatic transfer, even if it's just a little bit to start. Get gazelle intense about it. This isn't about being rich, it's about being responsible. It's about being an adult. It's about loving your family enough to protect them. Stop making excuses and start making progress. That emergency fund is your first giant step towards real financial peace. You can do this. I believe in you. Now go out there,